Hello, we are coming up with our 24th edition of Stock Review, Stock Recommendations and Market Outlook comprising 3 indices. The Nifty, the Bank Nifty and the cnxmidcap 100. We are also going to study the indices. We are going to review 3 stocks and there will be 2 recommendations. That will comprise the whole thing. That will comprise the 3 segments and their constituents. Now to talk about the Nifty. This week, the week just gone by, had been a very crucial week. Nifty had the potential to move further up, cross the 20,000 mark. Or should it go down? In that case, should it fall below 19,500 or even lower? What could happen if that were to happen? That is what we are going to study. Watch out Nifty in detail. Our Nifty review. Nifty for the last 5 trading sessions of the foregoing week, ending on 13th of October, what we see is that Nifty moved up initially for 3 days, Monday through Wednesday. At least Monday the close was lower, but it did try and test the 9-day exponential moving average. Also, it did try to cross the 50-day moving average as well. While what it could not do on Monday, it did on Tuesday and did it in style. On Tuesday, the Nifty actually did a high of 19,717.80, and in the process it crossed the then 50-day moving average at 19,562 and the 9-day moving average at 19,615. The weekly high was recorded on Thursday, the clearing day, when it touched a high of 19,843. And mind you, on Wednesday as well as Thursday, it did what it was trying to achieve for quite some time. What was that? That it was trying to get past the 20-day moving average, and the 20-day moving average was somewhere around, say, 19,750, and it did try and cross that, but it was a red candle. The high was high and the open was above 19,800, while the close and the low was below 800. However, on Friday it managed to close at 19,750. 19,751 is the close, while it did go down to 19,635 and showing a danger that it could be below the 9-day as well as the 20-day moving average, but it managed to remain above the 9-day moving average at 19,696 by closing at 19,751. What does that mean? All this movement that happened. And if you look at the moving averages, especially the 9-day and the 20-day moving average, 20-day is coming down, 9-day is moving up. So that's the reason why these 2 moving averages are acting. One is trying to act as a support and the other one is trying to act as a resistance. While the 20-day moving average assumes critical significance because it is the longer term moving average of the 2, and 2 trading sessions it managed to remain above that. So there is some degree of bullishness definitely, but it is always testing lower levels and trying to stay above the 20-day moving average, which it did on both on Friday. That is, 20-day moving average was at 19,734 and the 9-day moving average was at 96 and the index closed at 19,751. 19,751 is the adjusted close, that both 9-day and 20-day. This suggests a degree of bullishness in the Nifty. So let's look at the weekly chart and try and understand whether this bullishness is actually going to really work or not. What we see here is that what we see on the weekly chart is a very interesting pattern. The 20-week moving average was tested last week at it was at 19,325 and the low last week was 19,333. So that moving average acted as a support. Now look at the last candle. It's a green candle and it is comfortably above the 20-week moving average at 19,387 by closing at 19,750, and it is also above both the 50-week moving average as well as the 9-week moving average. So the weekly chart, it also closes above both the 9-week and the 20-week moving averages. In that case, we have to accept the fact that it is moderately bullish, especially if it were to sustain above, say, 19,650 in the coming week. Then it would maintain its bullishness. In the process, it will remain above the 9-week moving average, and we can expect higher levels. By the way, if it were to really show its bullish strength, in that case, initially it needs to take out 19,860, and in that case the 20,000 mark is also likely to be retested. Above 20,000, 20,050, and thereafter 20,120 and 20,222 are the three resistance levels. Now we are taking up the Bank Nifty. Again, we are using the same weekly chart as well as the daily chart to study the Bank Nifty. Bank Nifty has been the weakest of the lot for quite a few months. After the initial gusto that it showed since early April to about mid-June, after that the Bank Nifty has never been able to match the performance of cnxmidcap, let alone cnxmidcap. It didn't even tally with the Nifty itself. How is it going to perform now? Because we need to understand that major constituents of the Bank Nifty are actually weakening considerably. So let's see how Bank Nifty is likely to behave. The Bank Nifty. Now we are studying Bank Nifty again using initially with the daily chart, and thereafter we would definitely take into consideration as to how the weekly chart gives its indication. If you look at the daily chart, you see that here the three short-term moving averages that we use, 9-day, 20-day and 50-day moving average. Bank Nifty has been struggling throughout last week. It could not really even test the 20-day moving average. On the last day, the 20-day moving average remained at 44,714, and the weekly high was posted on Wednesday, and that was 44,710. While at that point of time, the 20-day moving average was at 44,840. So 20-day moving average has not been tested. But as you can see, the 20-day moving average not been tested, while throughout the week the Bank Nifty has been trading below the 50-day and the 20-day moving averages, and there had been an attempt at least for 2 consecutive days, Wednesday and Thursday. It tried to take out the 50-day moving average, but did it only unsuccessfully. And on Friday, what happened is that it is typically a Friday the 13th phenomenon for the bank nifty. It came down below all the 3 moving averages and closed at 44,287.95, while the closest moving average, that is the 9-day moving average, is at 44,396. Now look at what is happening at the bottom. At the bottom, especially when you look at the RSI on the first day, the RSI was at 40.19. That was Monday, and RSI did a peak on Wednesday. RSI, or rather on Thursday, the RSI moved up to 49.72, and finally it closed at 45.45, and on Wednesday it was at 38.79. So RSI is also not being able to push itself up. Now this suggests that the weakness signs are clearly visible, especially when you see that the 9-day exponential moving average, which is at 400 kind of levels, that is 396, it is weak, but only if it were to fall below that 44,300 to about 44,000 support area, bank nifty will become pretty weak. Now let's look at the weekly chart. The weekly chart shows that there is some ray of hope for the bank bulls, since the Gann angle on the weekly chart is actually giving it support, and the low was on the Gann angle. So what would be the Gann angle next week? Next week the Gann angle will be around this level. It will be around 44,129. So if 44,129 or roughly 44,100 is not decisively taken out, when we say decisively taken out, we would rather prefer the bank nifty to really come down below 42,800 mark, because this 1,000 point kind of range will still continue to give bank nifty some support. But on the weekly chart, what you see here, if you look at it around say July, there was a top 2 weekly candles were there around say 46,000 plus levels, and again during mid-September there had been 46,000 plus levels. So this is a horn top, and this horn top bottom is being retested now this week. So overall weakness of the bank nifty is still very much visible. So we need to see whether it breaks down below the 44,000 support area. If that happens, then there would be a most likely there would be a fall of about 1,000 points. I've seen the bank charts this week. They are not looking good at all. Major bank stocks, even IDFC Bank is also showing a lot of weakness. So bank nifty is decisively weak, and at higher levels expect selling, and until and unless it crosses 44,700, bank nifty would not show any kind of strength. Now we are taking up the CNX midcap. CNX midcap is driven by the SIP money. SIP money will continue to come. Is it still coming? At least on Thursday, we have seen lots of midcaps performing brilliantly, and throughout the week they showed lot of fresh vigor. Should it again rescale up to its earlier high, or it is just a flash in the pan? we will study using the weekly chart and the daily chart and come to a conclusion as to what could be the likely probable event. The CNX Midcap, this is the only index. Its relentless run had been halted. It has been moving sideways for the last 5 weeks. However, one thing you have to accept, that the retail has not given up. Retail is still fighting a great battle against any kind of downward pressure. So this week, retail lodged a rearguard action, and that rearguard action saw the CNX Midcap climbing up to 4731 and finally closing at 4506. 40,500 plus again. It is trying to reclaim the Gann angle, and its relentless run saw one thing. Despite the fact that over the last 5 weeks it has been struggling in the sense that not posting new highs, but it has managed to stay above the 9-week moving average. And that 9-week moving average, this time, this 9-week moving average is at 39,712, and the low for this week has been 39,634. Only a minor attempt at breaking down the 9-week moving average happened, but it wasn't successful. Banknifty is CNX Midcap is comfortably above 40,500, which is a far cry from 39,712. Cool 800 points above the 9-week moving average. So that being that, it is still showing a lot of strength on the weekly chart. So we need to see whether a significant resistance level, that is the Gann angle level, next week would be around 40,900 to about 41,000, where the Gann angle would be located next week. If it were to take out that level and stay above that, it would show a lot of bullishness that way. Let's look at the daily chart. We are looking at the year-to-date chart for the CNX Midcap. Here, of course, it is not that positive, because this is still a sideways movement, and as I said, that 41,000 needs to be taken out if the sideways movement has to go. At the same time, the sideways movement bottom is around 39,700. So unless 39,700 is taken out decisively, the CNX Midcap would not show weakness, but it will post a breakout only when it crosses that 41,000 kind of levels, 41,000, 41,100. So that is your CNX Midcap. So small cap, mid cap rally, at least in pockets, is very much likely to continue. So what we have seen, Nifty gives a mixed picture. Bank Nifty is decisively weak, whereas the CNX Midcap is trying to reclaim its strength. It was trending up, but now it is sideways, but no way it is going down as yet. Till such time 39,700 levels are taken out, we cannot say that CNX Midcap has become very weak. If you like my presentation, please press the like button, subscribe to my channel, share it, and also don't forget to press the bell button so that you get the notifications from YouTube whenever I post a new video. There had been quite a few requests for stock reviews. In the comment section, I have gathered quite a few such requests. Based on that, I would be doing some stock reviews from those counters that have been mentioned, and could be, if I find something more interesting, then maybe one or two from there or one or two from here, like that. Watch out. Our first review stock is Birla Precision. Birla Precision has been trying to take out the level of 53, above which it would become bullish again. Birla Precision is one stock that I have recommended on television. I have recommended elsewhere also. So there had been some demand from some quarters to review this. The moot point here is that Birla Precision needs to take out the level of 53 very decisively. In the recent past, what we see on the daily chart of Birla Precision is that it posted a high of 53.90 on 24th of July, and in that week that was the high, and that is the critical level. This last week we saw another high, which it went up to 52. Birla Precision is a BSE listed stock, and it is showing some traction. It is long-term bullish, because as you can see, initially in late 2021 it had a dream run up to 72, and after that it came down as low as 30 or even lower, and after that there has been a range-bound fight between the bulls and the bears. On the upside it was 48 to 53, and on the downside it has been somewhere around 30, 32. That is the level. Now it is making a fourth attempt to cross the 48 level, and it is trying to make the third attempt to cross the 53 mark. So 48 to 53 is the supply zone for Birla Precision. All you have to see is that whether it takes out the level of 53 with lots of volume and lots of delivery based buying. Only when that happens it will move up. And now anybody getting into this position should put a stop loss below 40, because that is the 50-week moving average. You should have a stop loss below that. And on the upside, if 53 is taken out, you will see that it would be trying to make an attempt to move up into the 60s or even 70s. So that is the possibility, because there had been a lot of accumulation in this stock. Our second review stock is IDFC First Bank. At one point of time, we recommended this stock to purchase. That was in the 70s. It went up to a high of 100.70. That was 5th of September. But after that there was a correction, and then there was a second attempt to get past the 100 mark. It could not. It went up to 98.40. That was 28th of September. After that, just as the whole banking sector is showing some weakness, even IDFC First Bank is also showing some weakness. So those people who have purchased IDFC First on my recommendations, some of them have requested me to do a review on IDFC First. As you can see on the daily chart of IDFC First Bank, that IDFC First Bank has not been able to show a green candle over the last several sessions. Only there was a doji or a hammerline pattern on 9th of October. That day the open was 90.05 and the close was also 90.05, a perfect doji, and it showed a bottom of 88.90. From that hammer line, that was Monday 9th of October. After that, again same doji like pattern, and for the last 3 days since Wednesday till last Friday we saw red candles. And if you count from the top, second higher top of 98.40, there had been only one green candle and two hammer lines, and rest are all red candles. At least what I can see is 8 red candles. So this is decisively weak, and this is also below it has closed below that 50-day moving average at 90.65. While it is definitely showing some weakness, but I must tell you that you need to consider this thing, that on its Gann angle support around 86, between 86 and 87. You need to take into consideration that level, because that level, unless decisively broken, it would be a course correction. But as of now, definitely it is showing some weakness, because the peak in the month of September, when it actually hit that 100 mark, that time the RSI started showing negative divergence, and this is that which is panning out. Overall sector is weak. This is also weak. If you briefly look at the weekly chart, the weekly chart is also showing a lot of distribution, and especially strong selling pressure above 95. So it will take some time before it takes out those levels. So 89 to 88 level, if broken, there will be another support of 20-week moving average, which is at 86. So 89 to 86 is roughly the support area. If you have to get out, if you want to exit this stock, then do it only after you see a close below 86. That is the 20-week moving average. Our third review stock is Concor. Concor is trying to stage a comeback. Container Corporation closed at 710.20 on last Friday, and Container Corporation has already taken out its 9-day exponential moving average. That is at 709. It has closed at 713.15, as you can see on the left top corner, the closing price. It is yet to take out its 20-day moving average at 719, but the kind of accumulation, or at least not accumulation, but some kind of good amount of buying that we saw on the last couple of sessions suggests that there is every possibility that Container Corporation can take out this 20-day moving average around 719. Container Corporation we recommended long back. So Container Corporation has come back. We have come to revisit it, and this trend line that you can see is just at the closing price level on the last day, that is around 713. So 713 to about 719 is the initial resistance zone for Concor. If Container Corporation takes out this 719 range, 713 to 719 range, then there will be a good possibility of an upswing. Initial resistance is likely to be at 725, which is the high. 725.70 is the high on 5th of October. That was also a Thursday, and once that level is taken out, then you can see the next target would be 739, 740, and thereafter the recent high around 747.70. So Concor, unless it falls below its 50-day moving average at 700, and 700 is also a psychological support, so Concor looks bullish once again. Now we come to our most interesting, the cherished, at least from my point of view, it is my cherished segment, because I'm putting my neck on it. What are the stocks, even in such situations when there is so much of uncertainty? Uncertainty arising out of the new war, apart from the Russo-Ukraine war, now there is Hamas versus Israel. How would things pan out? While discussing the stocks, I would try to highlight as to how the stocks can get affected by these kind of major external events. Why do the market get affected? I take Hindustan Unilever first. Briefly, to talk about the weekly chart, you will see that after a long range of sideways movement for a very long period of time, and then there had been a correction from the levels of 2750 to about say 2450, 300 point. Hindustan Lever has bounced back. We could not give a buy call immediately because at least some moving averages needed to be taken out. The 9-week moving average has been taken out and 20-week is likely to be taken out. In that case, the weekly chart is also supporting. So Hindustan Lever becomes your first buy candidate for the coming week. And when people are doubtful as to how the market will behave, they come to these kind of defensive stocks. Especially FMCG is definitely a major defensive area. Initial target would be 2590 to about 2600, while you should have a stop loss below 2530, the golden cross level of the two exponential moving averages. Can it go further up? Yes, of course it can go further up. And our next target beyond the 26 level would be 2630. 2630 to about 2650 would be the next range. Roughly 100 point, say 90 to 100 point target. But Hindustan Lever can jolly well go beyond 2680 as well. It's a good buy at current levels for those who are happy with, say, a few percentage point gains and being in the quality stock when the market is not showing one-sided bullishness. Hindustan Unilever can be your good bet. Our last and final stock is Nestle. As I said just a little while back, that this week we have chosen FMCG measures because they are showing traction. Of course, this week Tata Motors also posting a new high, but we haven't chosen Tata Motors because we want to be more in the safe side kind of thing. So Nestle, despite the fact that it is actually a very high price stock, 23,554, you would get safety when there is so much of topsy-turvy. There is this Hamas versus Israel war that is going on, when there is Ukraine and Russia conflict continues. So you seek quality, and that's the reason why I have chosen Nestle. Nestle, from the weekly chart that you can see, there is a clear breakout and the green candle. This is the second green candle in succession, and here also the 9-week and the 20-week moving averages are both moving up. Their gradients are up and there is a positive bullish crossover there. You can see that the 50-week moving average is also steadily moving up. So the bullishness in Nestle, you need not be told that Nestle is bullish. The weekly chart clearly shows that the overall consensus about Nestle continues to remain bullish and people are seeking quality. Only negative thing that I can see is that the 14-week RSI has not made a new high, while the prices have made a new high. We need to wait and see whether the RSI manages to catch up. Otherwise, it could mean that at some point in time there will be some consolidation, but immediately this is no major threat. Thank you for being with me. If you like my presentation, please press the like button, subscribe to my channel, share it among others, and also don't forget to press the bell button so that you get notifications whenever I post a new video. YouTube tells you.